Okay, we're going to go ahead and get started because we have a lot to go over, and time is valuable, so we want to make sure that we get the most out of the time that we have here with you today. For anybody that hasn't used GoToWebinar, just to give kind of a brief introduction to it, we want to go ahead and make sure that people understand the little blue flower looking logo at the bottom of the screen. If you click that, you should be able to see the options menu. There's a little menu that gives you the ability to, once again, by pushing and clicking on the little orange box with a white arrow, should extract out a little menu that gives you the option to chat and interact with us. And we'd ask that anybody that has any questions, if you could, feed those questions to us. A lot of times we'll just announce it. This webinar is live, and we will be recording it, and that's usually the first questions up. But we have a lot of exciting things to kind of go over with you, and we've gathered a lot of really valuable information over the last few weeks from folks like yourselves that have given us this feedback to help us determine exactly what's best fit for what we're doing here with this indicator and the system. So this webinar is being hosted and put on by TradeWest Forex. We're going to be introduced to the basic entry indicator, of course, another product I should say, in the long line of products from professional trader Mike Swanson. So we're excited to have him with us today. And please, well, like we mentioned, the feedback is huge to us, so please, if you have any questions or input, we'd love to hear it. So go ahead and shoot it to us. If you'd like to, you can also raise your hand, and we've been known on occasion to unmute mics to get that interaction. I see a couple of you already interested in doing that as well, so that's excellent. We're excited to hear what you have to say. And I might point out that we have a good number of folks that have been trading with us for years now, and I can see a good number of you surfacing here in the group. And we have quite a few people that are joining us for the very first time. So we'd like to welcome everybody that has never been to one of our webinars before with the TradeWest Forex group, or possibly even followed Mike Swanson in the past, because he's been doing this for a good time now. So. A good going, I guess, almost upwards near 9 years, I think now, or so. So we've got a lot of different people from different places, but welcome everyone. Okay, well, what we're going to go into today is we've had a lot of emails that we've sent out, everything from inquiries wondering where kind of the trader mindset is these days from one year to the next. Everyone knows that that the ideas in the markets are always changing, as are the markets, and that's one thing that we can always count on, is that there's varying schools of thought. And what we're going to do today is we're going to go into a little bit more depth as to why we've created an indicator to do what we've wanted it to do. And a lot of these tweaks and changes and adjustments and optimizations that we've come up with over the past several months have been direct requests from traders like yourself. So we're going to go ahead and go into what the basic entry indicator is. Maybe we'll talk a little bit about some of the other projects that we've been working on. But really, this is about the trader. So we're not going to go into a huge introduction about ourselves so much. We can do that at another time. But everybody is dying to know how this indicator works, and so that's really what we're here for. We're going to go ahead, and I'm going to turn the time over to Mike Swanson, and we'll have him dig into it. And please, like we mentioned, we're here in the background. If you've got questions, just because he doesn't announce a question doesn't mean your question's not going to be answered. We'll do our best to answer them as we go. So thanks so much, guys. And Mike, are you with us?
Yep, I'm here. Looks like we got a pretty good crowd here today, and so it's really exciting. I'm glad to see a lot of you are using the indicator and ready to learn how to make it even more successful. So that's what we're going to be spending our time doing today, is really just digging into how the parameters work, how exits should look like, what those should look like, and just all about the indicator today. So what you see on your chart when you first attach it, as you've probably already seen, is a couple messages that show up on the chart. So anytime we've got something important, as you can see today, we had the notification that came out a few minutes ago about the webinar. Some of you might have joined us that way. And then we've got another one that only happens the first time you load the indicator, and this is asking you to enter your email so you can be sure to get the important updates. And I can already see quite a few of you in here are mentioning you're using older versions. You don't have 1.24 and even 1.23. Now 1.24, I just barely uploaded that. There was a minor detail and we haven't announced it yet. We might make a few more changes, but if you do want to grab 1.24, you can do that at the same place you've been downloading before. But you want to make sure you're putting in your email here. That way when there is an update, we will let you know by shooting you an email. So once you've done that, everything on your chart, you can close these down. Everything's on your chart, the arrows. If you're trading this down to a 1 minute time frame, as I have it set up right now, if you know how the rules work, maybe I should get into that first, but you would expect there to be more arrows over here. And the reason why we're not seeing arrows on this 1 minute chart is because of the parameter that says we need so many pips wide of a range before we allow trades. Otherwise, you know, the spread can eat up your profits if you're trading on the 1 minute. So I really don't recommend trading on the 1 minute. I know some of you are trading even the 5 minute, and that one you have to be really good at reading price action to find the best exit. I would probably recommend 15-minute time frame or higher for most traders. But first, before we get into this too much further, let's just bring up the parameters and see what those look like. And there's two different ways you can access them. One, you can right-click on one of the lines here on the chart or even the arrows. You can just right-click on those and choose the Properties button there, TradeWest Forex Basic Entry Properties. Or you can right-click on the chart, go to Indicators List, and you will see the Basic Entry and Range Filter, and you can click Edit, and there's your list of parameters. So for most of us, you know, you're going to just use the defaults, but there is a lot of options in here, even for color changes. You can turn off the range filter, and I'll explain the range filter here in a minute. And you've got the trade alerts. If you don't want the alerts popping up whenever there's a buy arrow or a sell arrow, which, as you know, 1.23 and some of the older versions, that wasn't working, and now we've tested it in 1.24, that is working. So the trade alerts, you can enable or disable those. Most of these should be pretty straightforward, just reading the name here, but some of them are a little more technical, such as this one here, the channel calculation bars. So this is based on, this is how these levels here that you're seeing are calculated, how many bars of data you want to measure. And we found 55 to pretty much work across the board, from 1 minute to monthly. But you can definitely tweak that and see if you can find an improvement by either increasing or decreasing that number. A lot of this just comes with, you know, a lot of learning how this stuff works comes with just plugging in different parameters and seeing how it affects things. But we'll spend a few minutes just going over these, the rest of these parameters so you understand them. Minimum channel pips, this is defaulted to 10. This says that the distance between this blue bottom channel and the upper red channel must be at least 10 pips when an arrow is about to show up or an entry is about to show. It must be at least 10 pips wide. And we've done that because a lot of traders are targeting the mean, this middle level, as their target. And with the channel distance set at 10, that would mean that this middle level would be about 5 pips. So if you have a spread, if you have a 3 or 4 pip spread, then that can eat up most of your profits. So that's kind of the minimum you want to use. But you can definitely fine-tune that if you find that you're able to ride trades longer and not just target the mean, and you're doing well with your exits, you can adjust that. Okay, I see there's probably some questions coming in. I'll just finish up going over these parameters, and if you have any questions about any of them, just type in a question at any time, and I'll catch up to those here in a minute. Deviations from the mean, that's basically how these two levels are calculated, is using standard deviations, which is a shift of the mean, just shifted up or shifted down. So it's very similar to Bollinger Bands, and this whole system is basically relying on the statistics, the idea of that if the market moves 2 standard deviations away from the mean or from the average prices, then you will see that's 95% of the time it will stay within those bounds, and the 5% of the time that it goes outside of, you expect it to return to the mean. And the reason for that is because if the markets were normal, if they were always ranging, that would work 100% of the time. The thing is, the Forex markets do have breakouts and news and volatility that causes the this mean to change quite rapidly. So that's why the best thing to do is to find a pair that that ranges the most and doesn't have a lot of this volatility, or just avoid trading during those times. But basically, that's the whole idea with deviations. Is we set these offsets knowing that there's an extreme price movement that's taking place if we reach these, and you can use these for trend trading. You would just trade the opposite if you know the markets are around news time or there's a significant trend taking place. You could do the opposite and trade with the trend instead of just filtering those. But that's something we'll probably cover later. We want to just focus on when you see the arrows, what to do, and where to take your exits, things like that. The rest of these parameters are pretty straightforward. They're just for the visual side of things. The thickness of the buy channel, thickness of the mean, thickness of the sell channel. You can change that number from 1 to 5, and if you want to see those a little thicker and a little easier, you can do that. The arrow size, you can also change that from 1 to 5. That'll shrink or grow the size of the buy or sell arrows for these two parameters. The background color, you want to set that to whatever your chart background color is. And if you're using the template, then it's white. If you're using the default charts, they're black. So you'd want to change that. And then your foreground color, you want to change to whatever you see up here where it prints out, like Euro, Dollar, M1, or your time or your prices that you see on the side. That's the color that you want to use for your foreground. Buy channel color, again, that's just the straightforward visual of the channel, buy media, the mean level, buy channel, and buy arrow. All these are just the color settings. We had a lot of requests for more control of the colors for different backgrounds that you're using, so we basically opened it all up. And that's something I want to make a point about, is that it's really important that you guys give us your feedback. We haven't had a ton of feedback yet for this basic entry indicator, but that's why we're having this webinar today, is not only to train and teach you how to use it, but to get your suggestions and feedback and comments, and that'll help us improve it even further. Okay, so that's the parameters. Once you're done making those changes, you can just click OK and click close, and everything will reload. And then you'll see all the arrows on the charts, and it's just a matter of waiting for the next setup. And you should get an alert when an arrow shows up, confirming that there's a signal. I'm going to switch off of this 1 minute to the 15. And here you can see some of the recent entries, recent opportunities. And now what I want to point out is you do not want to come in and take every one of these signals and then exit at the mean. We've back tested that, programmed it into a robot, and found that you could make money with that, but it would be a lot of whipsaw, a lot of making money then losing it back, making money, losing it back, a lot of breaking even or making just a slight profit. So in order to really be even more successful with this, you need to fine-tune where you exit or filter some of these signals or use scaling. And by doing that, that's what I've been doing for years, and that's going to be the way to maximize your success with this system. Even though there is some great entries as you scroll across, you can see, 90% of these trades you should have been able to make money with. But what it all comes down to is where you close the trade out and where you put your stop loss, right? Okay, so something else I just noticed is our webinar attendee maximum was reached. So those that couldn't make it, we have this recording, and we'll be sending out the link to that. So if you do have to leave early, or if you came late, you'll be able to go back. We'll get you an email out once the recording's up. Let's see. So I didn't get a chance to go over some of your questions on let's see if anybody had any questions about those parameters. Let's see, rules of engagement. The rules of engagement are pretty much, as soon as you see the signal, I would just watch out for news. I try not to trade around the news, since that goes against the whole statistical approach here of we want to trade when the distribution is as normal as possible, basically when this green mean is staying neutral and not fluctuating a lot. As it starts to fluctuate, we have our filter down here, the range filter, that tries to point out when that's taking place so that you don't get in the wrong side of the move. The indicator comes in an EXE. You just run that and it'll automatically install all the files where they need to go. If you used the one that includes MetaTrader, it does everything for you and launches MetaTrader at the end. If you use the one that's just the indicator only, the EXE for that will let you choose what MetaTrader platform you want to install it to. And if you chose the zip, you have to copy and paste all the files where you want them. So we got 3 different options for you there. If you have a, let's see, why have an arrow on the opposite color of the price bar? Buy on an up price bar, sell on a down price bar. Otherwise, you're trying to pick tops and bottoms. I mean, that's kind of what this is doing. We're trying to pick tops and bottoms, really. And if you don't like that style of trading, if you don't like potentially being on this wrong side of the trend, one way to filter that, it's really very simple here, is to apply a moving average, 200 period, longer term moving average, and only take trades that are above and in the direction of that 200 EMA. So like this sell trade you would not have taken. This buy trade and this buy you would not have taken. So the thing with that is the system is designed to really try to pick the tops and bottoms, and what you need to do to avoid things like this is use the range filter. So let me explain the range filter really quick here. Basically, we're taking the same concepts of the statistics of deviations and standard deviation, and we're applying it to how fast price is moving once we get a signal. And so when you watch this indicator down here, this green level is your signal line, and when it exceeds this channel, you don't take a trade. That means the market's trending, and you don't want to do anything until it comes back inside, right here. Then it tells us the trend is over, and you can start to look for trades again. And the arrows will already not show up. You can see nothing showed up during that move. So it's already filtering them. That's what that parameter, this use range filter, if I turn that off to false, you'll notice that more arrows will start to show up where where it's exceeded the level, like right here. We've exceeded the channel, the range filter channel, but an arrow shows up. That's because I just turned off the filter. So once I turn that back on, you'll see that it waited now. It waited till it came back inside, then it shows the arrow. So it gets you into a better position than clear over here at the bottom. Okay. Let's see what else. We've got a few more questions coming in here. Okay, I'm going to catch up on questions in just 1 minute. I want to just give you a demonstration of what a trade setup would look like. Let's just scroll back. What I like to do is not go back and look at trades that have already happened. I like to not use hindsight here. I like to scroll until I see an arrow show up. Try not to move too quickly here. Okay, so I like to scroll until an arrow shows up so that I don't see what's about to happen. And then we can see that we reached the channel. The range indicator was just below the filter level, so the arrow shows up and tells us to sell. If I were also watching this, I would see several attempts at resistance, and as long as there wasn't any news coming up, I would have taken that trade and went short. Then you see it moves against you, and what you have to decide here is where is your stop going to be. And one of the best things I've found is to look at the previous breakout points. You can see up here there was a big breakout from this level. I would say the market's good, there's a good chance it's going to go up and test that area at 23.18. So I would not want to have a stop sooner than that. Even though that's a distance away, I might not have even wanted to take that trade until it came up closer. And you can see it did make its way up a little bit, not quite to that area, and then it starts to head back down. And what you can do is if you get back into this channel and you're not seeing any price action, no breaking through, or it tests through and doesn't break through, you want to look to start to exit. And one of the things you'd be doing here is using scaling out. I know a lot of you have probably tried this approach or been taught to use scaling or scaling in or scaling out. But if you use it properly, it does give you a huge edge when you're trading. I do a lot of scaling in, so when this market pulls up and it starts to consolidate and turn back down, I'll add to my position, and that reduces my, gives me a better average entry price. So if it does just come back down into this channel area, I'll exit the trade over here, or part of my trade, with a profit. So that's very straightforward. Just when you see the setup, there's a little bit of things you might want to do to look at the situation, but for while you're learning, you could pretty much take every single arrow and just really, really study and practice your exit. And I'm going to jump into all the exit stuff here in a minute. I know we got a lot of questions coming through, so I'm going to catch up on those and get as many of those answers as I can, and then we'll jump back on and dig into exits. Okay, so let's see. The 1 hour seems to be much more exacting on the entries. Okay, let's take a quick look at the hour. I know the hour, as you move up on the higher time frames, things will become more and more accurate. But the lower time frames you can do very well with if you, like I say, if you study price action and try to ride the moves as long as possible and keep your stops tight. And I'll show you how to do some of that here in a minute. But yeah, you can see the 1 hour does give some very nice 100 pip moves. There's 2 in a row right there. And things like this, you have to look back and see, but most of these trades don't need a very big stop. So if you short the top of this and it moves against you, I'd say as soon as you see the range filter going outside and against you, right when that bar closed, take a 20 pip loss so that when you make 100 pips, your risk to reward ratio is where it needs to be and you don't have to have such a high win rate. Okay, let's see, counting on the replay. Okay, yeah, no problem. Anybody else? We'd like as many of you to stay as possible so we can get your questions answered, get some feedback and some suggestions. But if you do have to go, we have a replay that'll go out. How does this differ from trading a regression channel indicator or strategy? The difference is, there's several different ways we're filtering the signals and doing resets. There's just a different way we're approaching this than most. A lot of traders have tried trading the Bollinger Bands, and even if you use the default settings, first of all, that's not going to work as well. So we've extended the period that it measures. Also, you'll notice with Bollinger Bands, let me just bring up a new chart. I'll just leave it on the, let's see, let me just throw this on here and remove our indicators. I'm going to show you what, some of you have tried Bollinger Band trading. I'll show you what that looks like and what the differences are. So the defaults are 20 and 2, 20 periods, 2 deviations, and they look something like this. And what they're designed for, that you might not realize, is for breakout trading. The way that those default settings work is when it breaks out of this channel, you go with the trend and you buy the breakout. We're not trading in that way. We're trading it the opposite. And on top of that, if you do try to trade the Bollinger Bands the opposite without filters or without using some of the resetting and things that we do, what will happen is you'll keep getting in on the wrong side. You'll sell here, and then it keeps moving up, and you'll keep selling. You'll sell. You'll keep taking the, you'll take the opposite side of the move continuously, and that's you'll give up all your profits in a few bad trades from a swing like this. So we've got it set up in a way where if you do get a signal like this against you, you'll take your loss, and then it will avoid all the rest of it until the next, until everything goes back to neutral and resets. So I guess the big idea here is that it's a lot different than regression trading or just straight Bollinger Band trading, because we've applied several different filters internally and with an indicator that you can visually see as well to try to show you the best opportunities. Okay, let's see what else we've got here. It's still a down price bar with an up arrow. Um, okay, yeah. Well, what's happening here is the arrow will print on the close of the bar. So as you're watching this signal generate, we used to have a repaint issue. Now we've got it where once the arrow there, it doesn't go away, even if you reattach it. And that's because before we were using the bid prices, and as it was fluctuating, the arrow could show up and go away. Now what happens is this arrow didn't show up until the next candle. As soon as the next candle printed, you'd be in that trade right on the open. As soon as the next bar opens, that arrow will show up. So it doesn't matter if it's an up bar or a down bar. That doesn't matter. We are simply taking the trade as soon as this position closes outside of the channels and meets all our other criteria. Yeah, Paul, I'm going to go over stops and targets, which entries, all that filtering in just a minute. I've just about caught up on the questions. Dave here is asking if we're still planning on releasing a manual and automatic trading version of the entry indicators and our system. And yeah, we sent out an email about that, about doing some sort of contest with semi-automated traders versus just straight manual traders. And we've actually changed gears a little bit. We've figured that we wanted to just get this in everybody's hands and get some feedback going and see what you guys think about it, and then later add the automated or semi-automated version. And actually, I've just started working on that this week. So we will keep you updated on that. It's probably just a few days out, and we'll let you know the details on that. But it's going to be a much more sophisticated program, and we'll probably have a webinar that will go over all the details on that. We've also been working on a fully automated version that we've already had beta testers run. We've been running it for a few months and with them, and as well as for a long time, good chunk of time on our own accounts, and have had some really good success with that. So you see, does the range filter have something to do with Keltner channels and when they go outside the Bollinger Bands? No, this is completely different. This is my own approach. It's really actually just too technical to get into. It involves, something they call a goodness of fit test using a certain really technical formula. But basically, I can find the times when the market is under normal distribution or under, when the market's going into trending or breakout mode. But it's done with a special formula, nothing like Keltner or anything you've seen. It's completely custom. Yes, the indicator does work really well with daily charts. You can switch up to the daily and the other time frames, and you'll see it works on there as well. There's a nice sell trade. There's a buy trade depending on your stop. It came back up. So the longer term stuff, you have to realize you're gonna need some pretty decent stops, and your win rate will be lower, but the runs when you catch them, you'll get some pretty decent runs. So we haven't done a ton of optimizing too. That's where you guys will have the option to go in and change the parameters for different time frames and see what fits it better. Right now, it's mostly optimized for day trading on these lower time frames. Bill, we can get you that download link. You should be able to check your email. We gave the direct download link right in your email, so if you don't see it there, let us know and we can post it on here for you. Can you also scale in with this strategy? Yes, Johan, definitely. I will go over that here in a minute. I keep saying that, but there's just a pile of questions coming down, coming on top of this. So let's see if I can catch a few more of these, and then I'll move on and we'll revisit these. We've got a couple support guys answering your questions as well, as I'm sure you're aware. So if I don't answer them out loud, check in the questions box for an answer that's typed back to you. We've got something like that. We're just going to show you. We've got something we're working on that's going to help you find the best take profit levels. We had a suggestion about using the ATRs and putting lines on the chart to show you different places that you could exit trades. Yeah, Gary's bringing up a good point here of if you're looking on the 15-minute chart, there's a signal, and it doesn't look as good when you move to the hourly. You can see here was the buy signal. It's moved down a little bit, and if you move to the hour, you can see there's a lot of room to the channels. We just came off of moving through the upper channel for a while there. That was due to the non-farm payroll last week. And so yeah, what I've found is I haven't done a ton of testing with this, but by going to multiple time frames and trying to make everything match up, you're going to filter a lot of signals. So for me, I pretty much, once I'm in a trade, I'll stick to the time frame that I took it on and analyze all the price action on that time frame. We've also got several of you in here that have been in our beta testing and been testing these indicators and things out with us longer than everyone else. So we'll open up some mics here in just a minute and let them share their experiences, and anybody else that has some comments, we'll have an open mic session here in a few. I'll just need to finish up going over the exits and scaling and some of those approaches, and then we'll hold that maybe towards the end of our session. Yeah, the entry is with the arrows. When the arrow shows up, that means that closing price is the entry. This indicator that you're seeing right now, Angus, does not cost money. This is a free tool. This webinar is all free information. I'm not going to say we don't have some other things for you guys that are coming up, and I think you're going to really enjoy them. We've got, like I said, a robot that's been running for quite a while now, doing very well, 100% automated. We've also got a much more advanced manual trading approach and tool that we'll talk about most likely later this week. But you can definitely, play with this indicator and take the trades. And we've already had quite a few that have had some great success with that, and you're going to hear from some of them. A few of them have already brought up that they'd like to talk about their experience so far. So you'll hear from them here in a minute. Okay, I know there's a few more questions, but I'm gonna get back to showing you guys a little bit more about using the indicator and the setups, and then we'll get back to answering questions and opening up the mics. So let's go back and just look at a few different trades. So okay, here's a signal that showed up, and if you just the first thing, as I've taught in some of the previous videos that you've been watching, is you need to understand why the system should work, and I've already dug into that as far as the statistics and what it takes for a signal to show up. But basically, the filter took place here. Otherwise, we would have sold way down here. So the filter worked well in this case, prevented us from going through that drawdown. It finally shows up the arrow over here. That's when we went back inside the channel. So the arrow shows up. Everything's good to go. And I'd say as long as there isn't any news or that there's an extreme breakout taking place, maybe you want to hold off. And that's some of the entry filtering you can do. But other than that, you can pretty much jump into the trade. One thing you're going to want to do is setups that are very clearly in a tight range. There's not a lot of movement like this. You'll maybe want to take with a larger trading size, and some of the tools we have coming up will help you calculate that and optimize the best trading sizes to use. But something like this, I would take a little more conservative because you just had a significant move up, and there's a good chance it could have fought against you again. So I would take that one with a smaller trading size. And all these little things you do, that they don't seem like they're helping you much, but if you look at your risk to reward ratio and your win rate, those two things combined could show that you're supposed to lose money. But by simply coming in and doing something like changing your lot size or scaling in or scaling out of trades, it doesn't really matter what what those statistics are, you can beat the system, beat the statistics and make money still by just applying some of these approaches. So a little bit of entry filtering, but the biggest thing really comes down to exits. And I'm going to show you exits and scaling, I guess. So I'm going to show you a little bit about that. And for me, it's really simple. It's going to take a little bit of practice for everybody to get the handle on this. But basically, if I was to take the sell trade, I would simply, I'd probably be over here, of course. So I'd be looking back and try to find where the last price breakout took place. So I can clearly see this movement here was a breakout of this channel. There was a lot of resistance. It broke out. My signal showed up. I took the trade. Well, if you understand support and resistance and how those levels work, the market will very likely pull back to the level of support or resistance and then resume its trend direction. And the reason for that, a lot of you probably never understood why that happens, but the reason why is because there are traders that bought right here, got stuck in a drawdown, and it just never came back up into money. Here, again, more traders bought, came down. Their trade positions never made it back into money. So, then when it went up this way, those guys got out and made money, and now at the same time, you've got traders now stuck that have sold at these levels before the breakout. So now guys that were short here that didn't exit with these profits down when it came into money, you've got traders that are short in a drawdown. So now what's going to happen to these guys? They're going to wait till it becomes profitable. And since we're looking at the 15-minute, this is day trader psychology taking place here. A lot of psychology drives the markets on these smaller time frames. So when you hear traders saying, or so-called gurus saying that you can't make money on the 15-minute chart, there's just a lot of noise. What they don't understand is there's a lot of psychology traders out, a lot of psychology affecting the market, and if you use some of that to your advantage, then you can make money on these smaller time frames and on all this noise. So one clear example of that is what we're showing you here is traders were stuck short, breaks out, they're stuck and they're holding on, maybe their stops are above this resistance, and they're waiting for it to become profitable again or break even. So what happens? The market pulls back also to the mean, but right to that level, right to that resistance where traders exited those positions with a break-even trade, which meant if they sold here, what do they have to do to exit a trade? They have to buy in order to close a sell. So buying causes the market to go back up. Did I lose anybody on that explanation of just maybe a little more in-depth understanding of why the market returns to previous support and resistance levels? Okay, so if anybody has any questions at any time, as I've said, just type them in, and our support guys will be answering those, and then I'll also go back and try to catch up on them as well. So anyways, that's a very easy trade to me right here. I mean, I would have taken that trade short and exited the position when it consolidated right here at the resistance. So that's the other thing too. What I find is you don't want to exit immediately when it reaches those levels, because it could just have easily pushed further and further down, and those traders would hold if there was momentum. But you can see here, we went by an hour and a half of it just sitting at that level. So that tells me those traders closed. There was no reason to continue holding that trade and risking it bouncing up like it did. So the other thing you have to look out for, this is just one example. There's going to be times when it comes just a few pips away from these guys, from these entries, or from these the support area. And so you have to keep that in mind too. If it comes really close, you do want to consider that. If it starts to come close and consolidate and starts to turn up, I would still even use that as a reason to exit, because not every broker's price feed is the same. And if it's a few pips off, some of those traders might have already gotten out at their break-even levels, but your broker's price feed doesn't show that. So one example could have been right here. This first little test right here was just right on top of the levels or really close and starts to turn up. I'd have probably most likely have been already exited right there. Okay, so something like that, I'd probably, you could either, if you're in a decent amount of profit, here you're up, only 10 pips or so you might not want to use a scaling out approach, but that's something you can take out half of your trade or a certain percentage of your trade, and then what you do is you leave the other half to ride. So that way, if you were wrong on your exit and it keeps going, you don't miss out on a bigger opportunity, and that'll help improve your risk to reward ratio. And no, Roy, the indicator does not repaint anymore. We had one of our first versions that came out had an alert issue. The alerts weren't working. The arrows were repainting, and all that's been fixed. 1.23 fixes the repainting. 1.24 now the alerts show up, so you can go and download that version from the same place you've been downloading the others. And as soon as it's officially released, 1.24 will shoot out an email. And as long as as I showed you earlier, the little box that pops up that says to put your email in for updates, as long as you put your email in there, you'll get the notifications. Okay, now let's just look at another signal. Let's look at a few of these just so you can see kind of the way I analyze things, the way I would trade these, and what I think that'll help you guys learn how to what you need to be looking for and what you need to be practicing. So if you took this sell trade, again, what we need to do is look back and see where the market was trading at before, and see where the breakout took place. So it was at this level here. So it broke out. Now that might have been a reason for me not to enter that trade. It was coming up to where my previous level's at that I'm saying the market's going to break out of and come back to. In that case, I would hold on and maybe not take that trade here, maybe take it up at a better level. Maybe once the range filter came back inside, which would have been on the close of this bar. So I would say instead of entering here, enter here on the close. Range filter entered back inside. That way you didn't have to go through that drawdown. So your stop, you can tighten your stop up when you enter here. And now your target is going to be this channel, or this resistance level where we know traders are stuck short. And it comes back to that level right here, and you can see it consolidates, so I'd be out. Now see, here's one of those examples where if you just scaled out only, you could have potentially caught the rest of the move. Okay, here's the buy side of things. Let's take a look at this one. Okay, this signal showed up over here, no arrow printed because the channel was exceeded, but the volatility was too high. The range filter picked up on it and said that there's a good chance the market's going to continue moving lower. So it waits till all that whipsaw took place and then finally prints the arrow right here. So that would have been, you would have took your trade there. You had some support over here. When you're looking at stop losses, one of the best things you can use for a stop loss is kind of your expected risk to reward ratio. So if you're expecting that the market's going to move up 20 or 30 pips, put your stop 20 or 30 pips lower. And so, we can measure that. Let's just look at that example over here. If we were to measure this trade, here's where we really would have taken that one. When we measured this as being 8 pips, we would have put our stop 8 pips higher. Now, this trade down here that we're looking at, this buy trade, same thing we can do is measure where the breakout took place, where the recent breakout was. And you can see there's consolidation up here, and that's kind of where the breakdown really took place. You can see there were several moves in this, but the very first one was right here. That came out of that consolidation. You had several bearish bars print. That's going to be your level of resistance that you're targeting. So on this trade, you would take a 43 pip stop, and you can see the market turned. It came up. It was into profit, and it came near. You got the 200 EMA here, but it comes kind of into this consolidation area, turns down. It's testing all the support. This is something where these trades are supposed to be quick. We're supposed to be able to find a quick move out. We get into the trade, and it quickly returns back to the mean. And if it doesn't do that, you want to start to look to exit your trade or at least start to scale out. So after I took this trade, if I would have gotten into this buy trade and I see it's been testing this support, moves up, tests the support again, I'd start to close out some of my position. You would have been in that trade already, 30, 15-minute candles, so we're looking at like 7 hours. 7 hours of it just being slightly in profit. I'd have either fully been exited out of that trade or at least scaled out. So that way when it moves down, you're not taking as big of a loss. Another thing you have to consider here is some traders will skip trades like this that have to have a 40 pip stop or so, or more. Maybe you have to have 100 pips. You'll skip those because you're thinking that's too big of a stop loss, and I don't want to take that trade. And sometimes that's valid. Sometimes if it's that far away, you probably don't want to fight the trend for it to try to get all the way back up to that level. But the other thing you need to consider is just because you're going to risk 100 pips doesn't mean you're going to lose more money than you would risking 10 pips or 20 pips. That is determined by how aggressive you take this trade, how many lots. So maybe you're looking at this as I'm going to have a 40 pip stop. I'm going to trade this 3 times less than I would over here. So that way if I hit my stop, I'm not taking out all my gains from these smaller wins over here. Yeah, that pink level, Dave, is 200 EMA. It's been a very good level for determining the trend. I just kind of threw that on there for those that wanted to not be counter trend traders. You can take trades that are just in the direction of that level. Okay, so anyways, these are the types of things that I'm talking about. When you first attach this and look at these, you're basically just looking to see, probably you see an arrow, did it go down? Do you see an arrow, did it go up? Well, if we looked at this one, there was profits here if you was able to, hold out for this drawdown. So that's why there's going to be a lot more to this, and you can make a lot of money if you study and practice some of these things I'm showing you with exits and finding places to scale in and scaling out before the moves break out into the London session over here, or after being in the trade for hours. You just take and get out of it when you're up a few pips like this, or even if you were down a few pips, it's not bad to take a few pip loss. And I know a lot of traders will do that where they don't like seeing a small loss on their account. They just want to see a pip or two, and they'll hold on and end up getting into a bad trade because they didn't want to take a few pips loss. So don't let that happen either. But anyway, let's see. Let's look at one more example, then I'll take some questions. Let's see. Let's look at how you could scale into a trade. Okay, let's see what we got here. Okay. One way, of course, is if you took a trade and you didn't exit at the mean, and you see another arrow, of course, you can add to your position in that case. But another thing I'll do is look over here. You had a sell trade, and then the market spiked up immediately, and then it came back inside the range filter area channel. So once that bar printed right here, that means that this move that just took place was most likely false. It was a false breakout, and I might add to my position there. So now I'm in at a 14 pips better price. My average entry is half between those. If I took, let's say I took one mini lot here and then another mini lot here. Now instead of it to be at a break-even level, instead of having to come clear down here, I only have to go halfway. So now look how nice this would work out by just using this very simple approach. Is scaling in makes me profitable right here. Several opportunities to exit with a profit now because of adding this second position. If I would not have added that position, my break-even level would have been down here, of course. And then I might not have gotten, I might have gotten stopped out up here before it made it to that level. So see how important scaling in can be, improving your average entry price, so that when you come down and consolidate, you can take profits off the table a lot sooner. The mean level is this green level on the chart, this middle channel, or this middle line. And basically, the system's going to work the most accurately when you see that level staying neutral, basically not moving up a lot and not moving down a lot. As soon as it starts to move, that's when the filter will kick in, and basically once things flatten back out, you'll see signals again. So you avoid all these false signals as it's exceeding the channel. Okay, so I'm sure there's a lot more. You guys need a lot more, a lot more examples and different things. So if you've got a particular trade setup that you've been watching, let me know the time frame and pair, and I'll jump onto that. In the meantime, I'll take some more questions, and then we'll open up the mics here and get some more feedback. Do I ever plot S and R lines on my chart and then look for indecision bars and enter on the reversal candles like pin bars, inside bars, engulfing? Actually that was an approach I was starting to take, was using the inside bar approach as a filter, and you can still do that. It does filter quite a few trades. I would rather take more trades and just be more precise on my exit and stop loss, but that will take more practice, of course. But things like this trade right here, the sell trade, you would not have taken because, or you could have taken, but you would have taken it earlier on the inside bar break up here. That would be one option. Support and resistance, you could simply put fractals on here. The problem is with the default fractal indicator, it doesn't let you specify how many bars make up a fractal. So for me, it's pretty simple to be able to determine where the previous support and resistance is at. Basically, you just look for a significant, a decent move down and back up, and you can spot those all over the place. But you want to see the ones that you want to point out the ones that stand out the most. So here, here, and here, those three. There was one here, 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 but I'm not going to mark those since there wasn't a lot of price action to the left and to the right of those. Yeah, that's someone's saying it looks like there's a lot of sell trades that look like they should be buy trades right now, and what's happening? The euro, we're looking at probably not the best place to look at this, but it's good to show you guys some of these tougher trades. But this is when the non-farm payroll news is coming out last week, and you can clearly see the market was setting up to break out. So other than that, if we scroll back and you look at the times where the market's more neutral, look at this section here. You've got back-to-back profitable trades at very good level, very, very good levels that you could be, pretty easily make profit on all of these. So, as you're probably seeing, what it really comes down to is keeping your stops as tight as possible, and then when you're in a good trade that's, you're seeing a nice move on, something like this sell trade here. There was a 70 or 80 pip move there. This buy trade, 60 pip move, sell trade, 53. When those trades took place, you need to ride those as long as you can. When this sell trade goes against you, do not let it go against you 50 or 60 pips. I mean, if I was to take this sell trade, I'd be looking at where's the previous level of support that the market's going to return to, and it's right inside here, right in the middle of this channel, 10 pips away. How many pips am I going to lose on this trade? Right here, 10 pips. I'm not going to lose 100 pips, and that's a big mistake the traders make, is once they do get in a bad trade, they sit there and let it ride against them 3 or 4 times longer than they do, than they let their profits ride, and that's going to hurt badly, especially if your win rate's not way up there. Johan's saying all those sell trades on the non-farm payroll would have been profitable because they hit the mean. So see, Johan here is making a good point that all those sell trades you're seeing, they were profitable. Maybe this one over here would have been tougher, but like I said, I would have held out and filtered that one since we was seeing a breakout take place, and I showed how that one still would have been profitable. But these other ones were definitely profitable. It came back right to the consolidation, also went to the mean. You'd be out right there for profit. This one broke out. I would have held off on that one and waited till we had maybe this inside bar, so that way I have a better place to target. But either way, if you took this trade and you target this channel, or this previous support area, it came back to it right here. So that one was profitable. Every one of those, all 3 of those, were testing this previous channel support area. So that's where I say, a lot of you do just like, you have to see who pointed that out, but someone else pointed out that all these trades look like they were on the wrong side, and that's because, if you look at it that way, if you're just looking at where the arrow's at and how far the market's moving, it's hard to tell that these are profitable trades. So you need to do like I'm saying here, and is to go back and look at the consolidation, Where the breakout takes place, the market's going to return to there, and that's where you target. And since you're targeting that small of a move, we're only looking at 8 pips. Put your stop at 8 pips. You don't have to have a big stop here and give back all your profits that you're making. Keep your stops tight too. So every one of these trades, they're coming back. That all these trades are small profits, but since your stops are tight, you can trade these more aggressive. And that way, when you make 10 pips, it could be just as much profit as a 50 pip trade if you're trading the right lot size. So that's where, we've got a tool coming up soon that's going to help with that, with lot size and figuring out what's the best lot size to trade at the right times, helping you find opportunities to exit, best places to scale in. We've got a way of doing a lot of automation, and that's where we're going to bring in the whole semi-automated stuff that we talked about before. So stay tuned for that. That's coming up most likely here in a few days. We've got a lot of questions still coming in, so I'm gonna start to answer some of those, and also open up the mic. We'll let Nate jump back in here for a minute, and I'll start typing back some questions, and then I'll jump back on as well here in just a few minutes.
Okay, sorry for the long wait there, you guys. I had to point this out. This is kind of funny. Phil had mentioned, he said, yes, letting trades run against you for too long becomes a religious trade because then you start praying. I'm going to go right into unmuting a couple mics if that's okay. We've had a lot of good feedback, and people are starting to notice the success rate that you can actually see with this, and it's very contingent, of course, upon keeping the rules. We are recording. A lot of people repetitively ask if we're recording this, so please don't sweat it. We're going to go ahead and record this, and you'll be able to watch the replay on it. A lot of this stuff takes more than one watching just to really get it. So we have one of our, I can see one of our beta testers. We have a few of our beta testers in here for some of the systems. We're not necessarily promoting any systems, but maybe we've got some feedback on the basic entry indicator. And yes, as everybody's asked about it, this is a totally free system. Your feedback's extremely valuable to us, so please let us have it. Give us all the feedback and input that you'd like to. Going ahead and unmuting Kenny here. Kenny, are you with us? We might have to hook up a mic there. Any other feedback that anybody would like to share with us? And I don't know if anyone's familiar with it, but you can actually raise your hand. There's a little hand that says raise your hand. If you raise your hand, you can actually stand out a little bit easier for us. Okay, we've got William that's also raising his hand. Bear with us just a second here, William. Okay, we're unmuting William. Can you hear us okay, William?
Yes, I certainly can. What I'd like to first of all comment on is the free information you are giving. Certainly gives us more confidence to buy product in the future, because a lot of free seminars are absolute rubbish. and I really appreciate the very good information that's been given in the seminar.
You bet. Well, I tell you what, William, it's kind of funny because we've, in the past, we've seen how a lot of other people had done it, and I have to confess, I like to think that we're a pretty real group of people, and when I say real, I mean genuine. We've learned a lot from other people's mistakes, and when I first started working with Mike a few years back, I learned very quickly that there's a common misunderstanding or probably misrepresentation to traders and what they're doing and you know, kind of their best efforts, and it's kind of sad because a lot of people tend to think that they have to follow that mold, and we've done our best work by going against the grain a little bit. I think a lot of our beta testers can attest to that. When we offer something, when we offer any kind of instructional or educational information, we get amazing feedback from people because not only they're using it, but there's no restriction to getting their hands on it, and we're all about that, getting a hold of where all of our traders and where their minds are, what their goals and aspirations are, their frustrations. So all of that is invaluable to us. So we appreciate you taking the time to be with us. So thanks for sharing your input, William.
Well, just one other comment too.
You bet.
If we're able to make some more money out of trading more profitably as a discipline, I'm in my 60s, and just like America, Australian middle class is diminishing. They're becoming very poor, and we have to have some way of securing an income, and people that help us to do this. And I'm in this business in the property area in Australia, but cash flow is also a problem, and I see that even with property investment, and I see that these type of programs, if I can put people into a system that will genuinely help them get started, get some profit, and then they'll invest further, and we'd be encouraging them to do that. So success breeds success, and people who create success programs, I believe in the future, will be very successful themselves.
Well, I think you hit it on the head. We've had a really good opportunity this last go around, I guess, just a little while back, and I don't want to go into detail, of course, because we're talking about the free stuff here. We want to see how this free stuff works. You know, we have other systems, of course, that Mike has talked about, but definitely, William, if you have an interest, you know, down the road, keep in touch with us. We have different projects, and we're in the middle of some right now, so let us know if you're interested in the beta side of things. So thank you very much for the input. We appreciate it.
Thank you. I've got to go now. Thanks very much for the program.
You bet.
Thank you.
Thanks a lot. Okay, I'm just looking for other hands in the mix here. I don't know if we've caught someone that was looking before here. List is pretty good size, so. Okay, let me go down here to one more. Okay, I have John. I have a John Z, and I also have Kenny. John, are you with us?
Yes, I am. Can you hear me?
I sure can, John. Go right ahead.
Yeah, I just wanted to point out that it seems as though the larger the time frame, the better the indicator is, the more accurate it is. I'm looking at the on my computer. I have the 4-hour chart on the Great British Pound US dollar pair, and it's just phenomenal. I mean, just incredible.
Yeah.
Just incredible. If you go to the 4
so
hours,
you stay clear of the 1 minute, don't you?
I don't, no. I mean, if you notice all those arrows that, as we were talking about earlier, look like they're getting you in on the wrong side of the market. But if you look at the 4 hour, you don't have that. You just really don't have that. Most of the moves are significant. Now, having said that, because of the way this sets up, I would have a tight stop on everything, and either it moved in my direction significantly or get me out quick. Why you really don't need a big stop on the 4 hour, because if it moves against you, just get out. Just get out and just wait for the next setup. Because when it moves in your direction, it moves really quickly, very aggressively, it seems like, and for quite a big move, quite a nice move. Yeah.
Excellent. Yeah, it seems
Yeah.
we've noticed a lot, and in other systems that we've developed, we've noticed. Yeah, you've probably seen this in the past if you've been following us for a good while, which I think you have.
Sure.
There's a lot on the 15, or I shouldn't say the 15, the 30-minute, and a lot on the hour. And yeah, you got to have a little bit more patience for some of those systems, but for someone that's looking for the full autopilot, they're out there that you can definitely let run. Out of curiosity, what size account have you tried trading it on so far?
Well, I haven't tried trading this one a money account because, I just wasn't familiar enough with it. I mean, this webinar has helped me a lot, really, gain my confidence. Personally, I like automation. When Mike said that he's looking at a fully automated system with this, I was, kind of beside myself. I was very happy. Because I can see that if I set this up on a 4-hour chart and use my parameters for a tight stop and just let the thing run, and maybe even with a trailing stop, this is incredible. This is phenomenal.
Yeah.
Really.
Yeah, you can see he's putting he's showing some different showing pips on different trades and kind of giving us a little demonstration here on the screen.
Okay.
Thank you very much, John. Yeah, you seem to have mastered every automated system that Mike has touched and actually been able to develop with the team and everything. So, been a valuable tester. Thanks a lot for the input.
No, it's my pleasure.
Appreciate
Anytime. Anytime. I
Yeah.
hope it helps.
Thanks a lot.
Sure.
Okay. Anybody else with any other input or ideas? That's one of the things that we look for is if someone has anything that they found that's giving them kind of an edge or an advantage. That's what this is all about, is to be able to get kind of level the playing field for traders. As William mentioned before, people are looking more and more to really get profitable as soon as they can and make sense of indicators that are working. And that's kind of what it comes down to, is we want to see you guys have some success. And then, of course, we want to show you the rest of the family of products, other things that we do. But it's all about being successful, and success breeds success, like he says. I like how he put that. Don't see any other hands at the moment. But if anybody has anything else that they'd like to share, please let us know. And we're gonna probably jump back over to Mike here in just a moment. Okay, Mike, you with us?
Yeah. Yes. Let me go ahead and you guys see me drawing on the chart on the pound dollar 4-hour, as John was mentioning, and you can see there are some very nice moves where you don't have to have a big stop. I mean, this one was a 25 pip stop. This one here ran 95. Only moved against you maybe 25 pips as well, 23 pips. The sell trade made a 246 pip move, moved against you 35. So definitely, as he said, there's some very nice moves on the upper time frames, and that might be a better starting point for those of you that don't have a handle on understanding price action, and that's where, like I said, on these lower time frames, it's going to be a lot more work, but there's going to be many more signals as well. But it might not be the best place if you're a completely new trader. So the other thing, we've had some questions popping up. Let me switch back to the 15-minute. Some questions about using the indicator to take trades, on the other side, to use it as a trend following setup. So let me reattach this. Okay, so let me show you one thing we've tested that's looked at and worked out very well. Is even as it's kind of like a stop and reverse method. So let's say I sold this trade, and then I see right here that we were exceeding this channel. We were exceeding the range filter. So rather than holding on to this trade or missing out on this little move up, this one wasn't a huge one, but still I could have exited this trade and got back on the other side, knowing that the market's going to move up for a while until that indicator comes back inside right here. So that would have been a way of taking and getting out of that trade, getting in the other direction and making some money. And here is an example where it works very well. you would have sold, and immediately the next candle you went outside of the filter area, and so you would have lost 14 pips if you rode that to the close, and then you would have bought, and you would have went in the other side and ran it up 40 pips, and then it turns down, the signal closed you out right here when it came back inside. So you could have flipped that trade that you lost 10 or 15 pips on into a 20 pip winning trade on the other side. So that's definitely another way of making these smaller time frames where there's going to be more more filtering necessary or more work needed. That's one way that you can improve your success quite significantly. Even look at this sell trade right here. Market goes outside right on this candle, and then you start to catch the move up. Now if it comes back inside and you get out, if it goes back outside again, you could jump back in, and that way you'd catch that swing up until it comes back inside again. So that's another thing I wanted to point out. There's a lot of traders that, let's say you had somebody that bought right here, and then they got out with 20 pips, and then over the next few hours they start getting really upset because they missed out on this massive move. Well, rather than getting upset, you could simply re-enter the trade. You don't have to miss out on the next swing. Once you get another signal outside of the channel, you could buy it again. And even if you get out here, again, get back in. And each time you're getting back in on those, you're scraping the profits out of that next swing up. So that works very well. Hopefully we'll have some feedback from you guys after taking some of these some of the training I've taught you guys with exits, and some of the other things you can be looking at, as far as even using the range filter as an entry indicator as well, when you have the market doing a little bit of a whipsaw pattern. And you'll see too that filter doesn't filter out the nice, very clear winning trades. Here's a buy trade. It wasn't even close to the channel, so even that little drawdown you would have held on and rode it up. This sell trade, this one did pop out and then came back inside, so you might have had to re-enter that one. But let's see, we've got quite a few more questions coming in. Looks like Pamela has her hand raised. A couple of you do, so maybe let me just confirm. Ross, Pamela, if you have a mic and you want to talk, let me know. Maybe just type in a message. And we can, actually another person too down here, Baz or Boz. Just type in a message if you do want me to unmute your mic and let you give some of your feedback rather than just typing it. If you're raising your hand, maybe because we didn't answer your question, I'm going to catch up on some of those. Let's see. Johan says he's clapping his hands. He likes some of that new approach, I guess, on what you can do to get out of those losing trades quickly and flip it and turn around and catch the trend move. Okay. So Ross is saying that this disables his screensaver. Okay, I'll have to check on that, Ross. I know when we had in EA that if your machine went into sleep mode or turned certain things on, it would or screensavers on, it would cause the EA not to trade. So that was something we've added into our EA, and it might be affecting the indicator. I'll have to check into that. Okay, James, I'll give you the link for 1.24. We could probably just post that to everybody in here, that if you don't have 1.24, you can get that. Let me just paste this. Looks like a couple of us pasted it for you. So you should be able to click that link in the chat, anybody that's not running 1.24. So you can get that installed. You do have a couple different options there. You've got, and maybe I could take you guys to this page, but let's see. Okay, so once you click that link, you'll land on the page here, and you can either just click this download button right away. This is if you don't have MetaTrader or anything installed at all, you'll want to use that link. If you do have MetaTrader, use this one down here in Part 1B. This is if you do have MetaTrader, and that way it'll allow you to choose what MetaTrader platforms you want to install it to. And then if any of this is not working for you, let us know. And also you can click the zip. But also let us know what happened. We want to make sure everything's working properly for everyone. So then you can read down here. We've got some instructions, some screenshots that you can look at that will explain how to set some of this up. It's all pretty straightforward. If you get lost anywhere, just go back and use the 1A installation. This is very easy. Just a few clicks and it'll install MetaTrader and the templates and everything for you automatically. Okay, Phil, no problem. Thanks for coming. Glad you enjoyed everything we went over. Let's see. We got a lot of questions on still out here, so I'm going to see if I can catch up here. Let's see. Waiting for signal node on my screen, the platform is running. If you see the waiting for price feed, that means that down here at the bottom right, most likely your broker's not connected. If you're not seeing the Market Watch window tick along, first of all, if you don't have the Market Watch, go up here to View and then click Market Watch. So if you don't see that time changing, that could be an issue. If everything's working there and you're not having a disconnection issue at the bottom, come down here and check the Experts and Journal tabs. Scroll through those, see if you see any errors. If you have like a DLL missing error or call error, that might be an issue where you don't have the DLLs in the right folder, and that's if you're using a zip, most likely that would happen. If you're using the installers, make sure you have MetaTrader closed so that the files can get copied where they need to be. We'll probably put together something, someone's mentioning having a PDF with all the detailed rules. So I'm sure we're going to post this this training video or webinar as a replay, and we'll also, put together some screenshots and a written explanation. I'm not sure what the ETA will be on that, but that's something we have talked about doing. Okay, Harold, I think I had somebody else mention the indicator slowing down their computer. If you're seeing something like that, see if there is any issues in the Experts or Journals tab, and maybe let me know how many instances that you have running, maybe how many charts are running the indicator. If anybody else is seeing that, let us know so we can see if this is just, just a few of you or if it's across the board an issue. Roy says he likes to find the trade on the 1 hour or the 4 hour and then go down to the 15-minute for the entry. And we talked about multiple time frames earlier, and we talked about it the other way, looking at it on the 15 and then going up. And I would not suggest that, but the way Roy is saying to do it here, where you start at the 4 hour or the upper time frame and then find your better entry on the 15, that's definitely, seems like a very good idea. So something you guys might want to try. The inside bar approach. Well, the inside bar is basically you want to see a candle where the high and low is in between the high and low of the previous bar. That would be an inside bar. and then you want to see it break the low in this case. If you're going to take a short trade, you'd want to see the low of the inside bar break before the high breaks. If the high breaks, then you've got a lot of indecision in the market, and no, that's not going to help you much. But here's a buy trade, for example. The buy arrow showed up. You would have wanted to hold off until you had this inside bar appear, and then it tested lower and then broke the inside bar. So that's a way of using a candle to filter some of your trades or give you better entries. Someone else was saying to maybe take the trade only after the breakout of the high on the bar that the arrow shows up on, and then that way you don't suffer this drawdown. You break out up here and you take the trade. So that's something else you guys might want to test. I haven't tested this on anchor charts or Renko or anything like that. So if you do find some success with that, let me know. What are the other products? Right now we just have the indicator, but we are working on, or we have the EA too. We have an EA that's fully automated, but that is right at the end of beta testing. And so we'll let you know on that probably later this week. We'll shoot out an email, but we've also got a more advanced manual trading program as well. So there's a lot of details to go over with those. We'll most likely have another webinar this week. Yeah, that's one thing that you could look at is the Asian session would be better because of ranges. You don't have to exclude every other session, but you just have to look out for, if you're going to trade the London or the New York, just watch out for the news events. Most of these big candles you see are related to news, and if you just filter those, you can trade 24 hours and still do really well. If you see, I have to look at that issue. Someone's mentioning, or if you switch time frames, I've noticed if you go up to, say, the 4-hour and then switch back down to the 15, depending on how far you were scrolled back, there might have been more bars that existed on this 15-minute chart, so that when I switch to a different time frame, some of the arrows can get messed up. So if that happens, just right-click on your chart and reattach your template or reattach the indicator until we see if that's an issue we can, we should be able to solve it, but I just don't know what's exactly generating it other than the bars. It's the only thing I can see. See, if I scroll back and add more bars, that's when it happens. So if you go up to Tools, Options, Charts, you can see I'm allowed to have 65,000 bars in my chart, and if I go beyond that, it starts to download more bars and messes things up. So I'm sure we can find out a workaround for that, but for now, it's simple as just reattaching the template, and you'll see everything readjusts. Yeah, we definitely have a trailing stop idea for one of our tools we're working on. I think you guys are really going to like what we've got coming up. I mean, we've been working really hard day and night on this indicator and the EA and this other tool, and we'll keep you informed when those become available, when those other tools become available. Well, we've been in the webinar here for about an hour and a half, and we've had quite a few questions, and let's just get some just straightforward feedback as far as what you guys think about it. I mean, are you having success with it already, or do you think this has potential? Just so, let me know if this is something that's you think it's worth your time, worth putting in the effort, or maybe you think this is just a Bollinger Band system. I think some of you might have that opinion. We've had a few of you question if this is just a Bollinger Band trading strategy, which I've explained earlier. It's completely different. Someone here says, Dave says, absolutely brilliant. John here, John George says, great potential. Only a few of you commenting on that, but you know, let me know. Let me know what it is you like about it, maybe what you don't like about it, and that's going to help us improve it for everyone. But basically, like I said, this is not your common Bollinger Band system. Bollinger Band systems are designed to trade the breakouts when the bands squeeze and get really tight together. You know, you look for things like, you know, back here everything's getting tighter and tighter and tighter, and then it breaks out, and you would take the trade in the direction of that trend. Or even right here, they get tight, and you try to buy that or sell that breakout. And we're not using it that way. There are other traders, I'm sure, out there that use Bollinger Bands to trade against the move and counter trend trade with them, but they do something like this. They buy, and they keep buying all the way down, and they go into these massive losses. So you can see we only triggered 2 setups, and then it waited. It knew that this move was strong based on the range filter, waited till everything reset at the mean. Once you are at the mean, it looks for signals again. Yeah, this webinar will be, I know a lot of you are just showing up. We did max out the number of attendees that could come. We maxed out, so some of you might have just barely been able to get in. And we will have the full webinar in a video format, and we'll email you that. Yeah, John, so, you know, a couple of you are saying here, in the past you didn't have a lot of information on how to use it, so you don't know if it's successful or not really. So now I hope after I've given you all these other approaches and ways of finding exits and where to put stops, we still didn't have a ton of time to really dig into this. And that's where I think some of the things we have coming up, some more tools and some more things that are coming up, and we'll have more webinars that's going to help bring it all together. Well, I'm going to let Nate jump back in. We're pretty much at the tail end of things. He might have some more questions for you guys, and I'll stick around in the background and answer some questions, type back some answers to your questions.
Okay, Mike. Hey, there's a lot of different questions that are coming up, and I just wanted to point out a couple of them here before we close things off. The reason we're kind of casual today, it's a different approach. We've really found that the best information that we get more often than not is when we have people that aren't vested one way or another in what we're doing. They're just interested, and there's just that simple interest gives us enough of the type of feedback that we're looking for. If you haven't already noticed, I know that there's a lot of people that are assuming that there's more out there. We're kind of holding something back from it. It's not that we're trying to hold things back. We just don't want people to feel like you have any kind of obligation to come. We're not putting together any sales presentation in what we're doing right now. If it's free, you're going to know it's free, and we want you to have that opportunity to get your hands on it and use it. Like I say, we are definitely taking full advantage of the feedback that we get, and that just helps us build the kind of systems that people can actually make profitable and have the most success with. So that is what we're doing. So I guess if we're taking advantage of something, it's definitely the feedback. So we appreciate everybody and their input. We've had a lot of people that have raised their hands here and there, and it might have been that you raised your hand in the middle of part of the instructional time that Mike was taking. So if you do still have something else you'd like to share, feel free to go ahead and do so. I know that there's a lot of you that have made a lot of comments here. And yes, someone asked if this is the same Mike Swanson that created Dynamic Delta Swanson Money Management. It is. So if you have that money management system, now I will say with the systems that he has, though he has this background of money management and lot size calculation, all these different things, a lot of what you're seeing in this system is going to have an element of its own. I don't want to say evolved, but kind of different money management. So more often than not, you don't have to worry about that, but it's okay to ask. You bet. John is saying projections I see look extremely profitable. So as you guys go through this, we see a lot of optimism. If you've got questions concerning it, please, if you haven't already, go in and add us on Skype. And it sounds kind of funny. I'm sure a lot of you have heard of what Skype is. Skype.com, you can go in and get a free download. We have a lot of people that that will go in and give that feedback to us through that Skype channel, and that's perfectly fine. It gives us the opportunity to respond if we're there, or if we can get back to it. It's a message that pops up and we can see that someone's responded. Feel free to do that as well. But we are going to go ahead and close things down here. Just want to check and make sure that we don't have any other unanswered questions. And if you have asked a question and we didn't get to you, I try to point this out every webinar. Sometimes they come across the screen here so fast that you could be somewhere up the line just because of how much space it takes up. We may or may not actually catch your question before it goes too far up the line, before we don't see it anymore. So forgive us there if we missed a question. But I noticed we have a few people in here that had an interest in sharing, but it might not have been able to. Kenny, we tried to catch Kenny, and we do have actually quite a few beta testers in here. But we did max out today, so as we mentioned, we're going to record this, or we're recording it, and we'll share that recording with everybody else. Kenny, if you're with us, I'll give you another chance here to jump in on the microphone. We did have someone ask if the dynamic delta swap and money management, if we'll work with this strategy. If so, how? Okay, so I guess Mike had already pointed out that on the lot size calculation that it can help in that sense. So I guess you can use it with this one and the other systems. When you guys do a little more digging and find out some of the other projects that we're working on, you probably notice that the money management is all part of the system. But that's what happens when you go into the more fully automated things are working. And yes, someone also asked about the system. The fully automated system is called Trade Hero. That's correct. So, okay, guys. Well, we've had a good opportunity to spend some time with you going over the rules of engagement, as Johan had mentioned before. But we appreciate everybody being here, and please, stay tuned. Look for further emails. We're looking to potentially have another webinar here in a couple days. Just keep on the lookout for that. And thanks so much for taking the time to be with us. Yes, everything that you've got in here that we're talking about, this is all free material. So definitely follow us, join us on Facebook, go to our YouTube channel, get all the information you can on us. We'd love to have you along. So thanks so much. We'll talk to you guys next time.